Daniel, and you're watching Unrivaled Investing. This is a no-hype financial channel that is mission-focused on finding you exceptional companies and unrivaled investments. Today, we are looking at APXT Stock, otherwise known as Apex Technology Acquisition Corp., which is a SPAC. They're going to be merging with AvePoint, at which point, when they merge, the stock will be AVPT Stock. So right now, APXT Stock, and hopefully the dyslexia doesn't take over because it'll be merging with AvePoint, and the ticker then will be AVPT Stock. So what is Apex Technology? Right now, it's a SPAC, which is $350 million in cash looking for a deal. They found that deal in AvePoint, bringing AvePoint public, and following the announcement, APXT stock rallied significantly. The stock went nearly parabolic, up 40%. So it's got my interest. Like, what's driving this? Is this the beginning of a multi-bagger type of run? And AvePoint is tapping into a huge market by aligning with Microsoft's Azure cloud solutions. And so the question is does AVPT and right now APXT stock have huge potential in not only the years ahead, but maybe in the immediate future, assuming the deal goes through. In particular, this video goes out to Amin, Paul, and S. Jing, who are all Unrivaled Investing Journey subscribers. Thank you so much for being an Unrivaled Investing Journey subscriber. And a quick plug, if you enjoy learning about potential multi-baggers, make sure you subscribe. If you're already a subscriber, I appreciate the thumbs up. And if you want to follow my personal journey to try to find potential multi-baggers, go to unrivaledinvesting.com, click on Journey. So let's dig right into AvePoint. What is AvePoint? AvePoint is a Microsoft partner and a technology integrator. So you have companies, you have governments, you have private, public stocks, whatever. They are all needing to help manage their data. And so that might be taking their data from on-premise on their own servers and migrating it to the cloud. It might be about finding out whose cloud they should migrate to. Generally, migrating to the cloud is a multi-year, multi-decade trend because it is generally more secure and more affordable for companies to outsource effectively managing their data to one of these major cloud providers like Microsoft or Amazon or Google. And so, but when you migrate it, it raises all sorts of questions about like, hey, how are we going to transfer that data? Who has access to that data? Like governance and compliance. Like, are we making sure that we're, if there's super sensitive data, no one's seeing it that shouldn't be, or that, like we purposely don't have, or we're not retaining certain types of data. Like for some retail businesses, it's making sure they don't have credit card information. For government bureaus, it's making sure they're not sharing personal identifiable information. And so then AvePoint comes in and says, hey, we are a partner of Microsoft. We have all of Microsoft's solutions at our disposal. We think Microsoft's tools can help you meet your data needs, can help meet your business organizational needs. And we're the company, we, AvePoint, can help integrate Microsoft's tools in your organization. And you know what? If you have trouble installing it or doing this integration, transferring your data, or you have a problem in the middle of the night, your Microsoft Excel or your cloud or your Microsoft team isn't working, you can talk to us because we're the ones that are holding your hand. So it becomes part of a sticky, sort of like a consulting-like relationship. It's important to recognize that AvePoint, by effectively being an exclusive Microsoft, integrator at this point, their destiny is tied to how Microsoft does in the future. At this point, that looks promising as Microsoft Azure is growing very quickly. So, and they've won some major customers AvePoint has, where you're looking at Disney, Caterpillar, Kaiser Permanente, U.S. Treasury Department, U.S. State Department. These are major wins, and it should make it easier for them to win other top brands in the future, other top companies in the future, when you're able to post this sort of roster. And the reality is, by aligning themselves with Microsoft, that it has been the winning horse, or a winning horse to align themselves with, where you can see Microsoft has 13% of the infrastructure as a service market, the software as a service, and productivity and collaboration. Each of these are huge multi-billion-dollar markets where Microsoft has a good stake, and they are effectively, AvePoint is effectively offering Microsoft's tools to these end users, integrating it in these organizations. And it's really interesting. This is a quote that I'm going to come back to in a minute or two, where we have seen 2 years worth of digital transformation in 2 months. This is Satya Nadella, the head of Microsoft, talking about how COVID has sort of accelerated organizations transferring their digital data in terms of how they manage it. So what need does AvePoint address? And it really comes down to transformation, transferring the data to a Microsoft cloud. It's the governance of making sure the data is being properly managed, and compliance, like, are you meeting the laws and the regulations of how that data is being managed? And you can see they cover several different verticals like government, financial services, pharma, and health. Each of these, you could totally understand why it's so important not to screw up your data. Like, you can't have government sharing social security numbers. You can't have financial services, screwing up account balances or sharing super sensitive data, or pharmacy sharing, or health company sharing, healthcare sharing, their health system, their private patient data. Each of these have very sensitive aspects. So let's sort of summarize this, which is that it's about helping companies manage their data, whether or not it's the data, it's growing so fast. How do you manage it? How do you make sure that it's being protected and backed up? If you're constantly having more stuff come in, it would be great if you can have this updated in real time. So that way, if something gets corrupted, you have the file version that was from around, yesterday or a few hours ago. And the reality is, it's becoming increasingly costly not to be in compliance, and to either have a privacy or cybersecurity issue. So by aligning yourself with Microsoft, you're bringing the best that Microsoft has, and it's ideally improving these organizations by having Microsoft's tools. And AvePoint is the one that's saying, hey, we can help provide Microsoft's tools for you, and we think that it meets your needs. One case study example is how the State Department worked with AvePoint to transfer 13 terabits of data to Microsoft's, or to a hybrid cloud solution. And it was about setting up backups as often as every 4 hours for that data, as well as reducing their data byte sizes by 90%. So maybe that means taking this huge amount of data that's on their on-premise, on their existing servers, and transferring it to various different cloud solutions like Microsoft Azure. And also, how do you audit this data, enable compliance about personal identifiable information, making sure it's all secure? And the reality is, this was an initial investment, initial business in 2006, and has grown to $7 million in value from the U.S. State Department to AvePoint, which is really solid, in terms of growth over time. So how have they performed over time as a company? And the reality is, they've grown very quickly. They were growing in the teens rate, and they've accelerated that in the most recent quarters, where now it's been in the mid 20s or mid to high 20s in terms of their growth. And you could see that of their revenue, so this is annualized recurring revenue, they also have a nice amount that's recurring. So over 80% of their revenue is recurring in nature, which is fantastic. It is interesting that they're saying, look, we think we can accelerate our growth from mid to high 20s to 30%. That's what they're articulating here in the future years. That's sort of a question mark for me, because when you look at Satya Nadella, that quote I just mentioned, where he was saying, look, the growth was sort of being pulled forward in 2 months because of COVID. So it makes me wonder how realistic it is for them to see a further acceleration in the years ahead. Nevertheless, are they sticky? Is this business super sticky? That's a key, aspect to, do you have repeat business, which makes it easier to grow your business over time? And the reality is, their business is very sticky, where the net revenue retention is over 100%, meaning if they didn't get any new customers, during the year, they would still grow by, in this case, like 6%, because their existing customers are using more of the Microsoft. And if they're using more and more Microsoft tools, let's say, they have more seats where they need to have Microsoft Word or Microsoft Office or Microsoft, 365, for each new seat, or for the increased data usage, they're going to get a cut of that as they grow. So that's traditionally how this sort of business model works. So it's not surprising that you see this. And the reality is, once you're plugged into Microsoft, it's not like you're going to rip them out, one day to the next. You're going to be set with them, and they're going to be the provider for their end customers for years, if not decades into the future, making sure, hey, are your Microsoft solutions working? And then when they talk about their market potential, they think all in it's about, $15 billion total market at this point, where in the next, few years, they think they can get to 1 billion in revenue, which would imply, a multi-bagger from here based on their their projection is 150 million approximately in 2020 revenue. So they're saying, look, we think we could do 5x in the next few years based on looking at this market, based on taking share over time. But when I see that they're saying, look, we only have 3% market share right now, because they say, look, we have number of AvePoint users using Microsoft 365 or 7 million seats versus Microsoft 365 users total of 250 million. That's 3% share. Like, that doesn't strike me as having an unrivaled value proposition. That's a key filter I look at all prospective investments. And this means there's even excluding users that go to Microsoft directly and don't need an integrator or a third party helping to bring their Microsoft solutions in house. That this still does suggest to me that there's a lot of competition out there. But nevertheless, they're saying, look, we think they think they can take share over time. And that's something I would want to understand better if I were to be a shareholder in AvePoint. What's management think of their long-term potential? They think they're going to pencil out 25% plus EBITDA margins or operating profit in the future. That is a best of breed type of margin, because if you can look at a sort of a more mature consulting company like Accenture, and Accenture has done really well over time. Accenture does 14-15% operating margins. So this is a full 10% better. Now, part of this may just be the dynamic of having a company with a high recurring revenue, 80% plus recurring revenue, versus Accenture, which is more consulting, one-off sort of gigs. So seeing this, does speak to a best of breed sort of margin profile. What about valuation of AvePoint? And when we look at it, the stock has rallied significantly over a few days. So this is where you're either this greedy speculator and let's pump this thing up, or you try to be a rational investor and say, hey, what's a reasonable risk reward? What's a good fair price? I pencil out this sheet. This is a sheet you can download. It'll be in the description of the video. You can play around with the assumptions yourself, entirely up to you. And of course, whatever I pencil out, it could go a lot higher, a lot lower. This is just what I'm penciling out, my logical framework. If you strongly disagree with any of the assumptions that lead to a dramatically different outcome, I'd love to hear about what those assumptions are. Arguing over the outcome doesn't draw much, isn't that valuable if you can't back it up by what do you think the assumptions are and what drives that over time. And so here it is, $14 a share, 200 million shares outstanding. That gets to around a little under $3 billion market valuation. They're saying they think they can do 148 million in revenue in 2020. Because 2020 is almost over, I'm giving them full credit for that, and then saying, hey, what's 2021? I think they're penciling out 193, so I'm giving them a range of 175 on the low side versus 200 on the high side. And then what's that margin profile? They were saying 25% on a slide ago. So here I'm doing a full range from Accenture, which is which is one of the top-notch consulting firms at 15% versus 25, where they're saying, hey, we're even better. Applying a tax rate, and you can see what sort of earnings multiple that implies for this business, if assuming that they were to get these margins right now. They're obviously not doing that right now because they're reinvesting in the business. And then what's sort of their growth rate in the years ahead? I'm penciling out, in all honesty, I think this is fairly generous in terms of the growth rate, given that just a few quarters ago, they were below 20% growth. And here it is, I'm saying over the next 5 years, let's assume 25% on the low side, 40% on the high side. That's even higher than what management was penciling out. And then, take a range, an earnings range of 20 to 30 times. This might be, too conservative. This might be too aggressive. But either way, this does not pencil out a great risk reward. This pencils out about 100% upside and nearly 60% downside. So I'm not really sold on the risk reward or the valuation. And so just sort of as a quick recap, this is a company that's riding the wave of Microsoft, riding Microsoft Cloud, Azure. And Azure is growing at a good clip, and they're growing at a good clip. But I'm just not crazy about this company. I'm not crazy about the risk reward. And so I'm not investing. And I'm also going to create an exclusive video just for my Unrivaled Investing Journey subscribers, where I sort of call out a bunch of other aspects that really actually sort of bother me, where I think the company's sort of misleading potential investors or shareholders, or they're at the very least, they're just being disingenuous. And so, I'm gonna call that out in a separate video that I'm going to post, and I'll post it in the comments, so you'll be able to see that. Click on it if you're interested. But that's just going to be for Unrivaled Investing Journey subscribers, and I'll share not only the things that sort of the detractors from the thesis, but also what it would take for me to change my mind. Like why, at what point would I consider investing? But that's part of the exclusive content for Unrivaled Investing Journey subscribers. Other aspects of the exclusive content are seeing what I invest in each month. I also update during the month what I'm buying, what I find interesting. And the reality is, I'm just trying to find potential multi-baggers, and finding one potential multi-bagger can change your life journey. So if you're interested in following my journey to try to find these potential multi-baggers, go to unrivaledinvesting.com, click on Journey. And if you enjoyed this video learning about Apex Technology Stock, APXT Stock, which will be AvePoint AVPT Stock, make sure you subscribe. If you're already a subscriber, I appreciate that thumbs up, and thank you so much for watching.